On the debt side, I'll talk about some of the actively managed duration categories like gilt, then corporate bond fund category and dynamic bond fund category. Now here we find ICICI Pru topping the ranking, especially in the gilt and corporate bond fund category. Then we have Bandhan, which is top ranked fund in the dynamic bond fund category.
And just to note there, Bandhan is the old IDFC.
Yes, it's the old IDFC mutual fund. Now if you look at Bandhan specifically, they have a philosophy of managing debt funds primarily from the perspective of interest rate or duration management. So unlike other funds which tend to focus more both on credit and duration, this is a fund house which tends to focus largely on duration management, and they have done it well over a period of time, and hence their fund is top ranked fund.
Folks, welcome to Paisa Paisa. I'm yours Anupam Gupta, B50 on Twitter, and on today's episode, I'm thrilled to bring for the very first time on our show, CRISIL, my guest Piyush Gupta, Director Fund Research, CRISIL Market Intelligence and Analytics. He's here to talk about their mutual funds ranking report, how to choose a mutual fund that is relevant to you, and much more. Piyush, welcome to Paisa Paisa. Thank you so much for doing this for our listeners. I'm really thrilled to have CRISIL. Our podcast has been there for like 7 years, and I've got the mutual funds piece of CRISIL, so to say, on our show. Hopefully, I'll get more. Great to have you here.
Thank you so much, Anupam.
Let us start with what is called the CFMR, or the CRISIL Mutual Funds Ranking Report. It's been around for quite a while. It's an industry-leading product. Tell us why you started it, what is the methodology and process behind the rankings.
Sure. So, in fact, CRISIL Mutual Fund Ranking has been there for more than 20 years. It was first released in the year 2000. June 2000 is when we released our first ranking. So if you look at it, it's almost like 24 years since when we have been releasing these rankings. It's a product which has got evolved over a period of time. You go back 24 years back, the industry itself was at its nascent stage. It was still evolving. There was limited understanding or awareness about the mutual funds from the investor perspective. That's when we thought that there is a need for product which can help the investors in making an informed investment decision. Now, as we speak today, we are publishing it on an ongoing basis. It's available on the CRISIL website. From the perspective of methodology, it's a fairly elaborate process. To start off with, we look at shortlisting the funds. There are certain criteria that we use. Two broad criteria are in the form of inception date or the performance track record, and also the minimum asset size. So these are the two filtering criteria before any fund becomes eligible for the ranking. Once the shortlisting is done, then there are multiple parameters which we consider. So there are separate set of parameters for equity funds, separate set of parameters for debt funds. Unlike commonly used approach of risk-adjusted performance, we also look at the portfolio risk attributes. So we look at the underlying composition of individual schemes, and they become part of the ranking exercise. If I were to look at the parameters, we are looking at performance, which is consistency of performance. In case of equity or long-term debt schemes, we look at 3 years of performance track record. In case of short-term categories, we look at 1 year of performance track record. Same performance is evaluated from the perspective of volatility or standard deviation. On the portfolio side, when we look at equity, we look at factors like extent of diversification in the portfolio. This again is looked at both at a company level as well as at the sector level. Apart from this, we also look at liquidity of the underlying portfolio. Now, if you notice recently, there was a lot of talk about liquidity risk, especially in the small and mid-cap space. And this is a parameter that we have been evaluating for a period of time. We simply look at what are the number of stocks which are there in the portfolio and how does it compare with the trading volume. So in a way, it kind of evaluates whether the fund manager will be able to liquidate some of its holding in case the need arises. On the debt side, the parameters are slightly different. Interest rate risk, credit risk are the two major factors from the debt perspective, and these two are evaluated. So credit quality assessment is carried out for all the debt funds. On the concentration bit, we again look at concentration at the company level. There again, we segregate between issuers which are rated AAA, AA, A, and so on and so forth. And there are different cutoffs we use. And any exposure which is beyond those cutoffs, the penalization happens in the ranking process. Besides this, we look at interest rate risk, which is measured using duration. So primarily those categories where there is an active duration management, we look at this parameter.
Very interesting. So, folks, if you're wondering what is this used for, remember that when you, I, or anybody goes to do research on mutual funds, we usually land up on Google or somewhere and just put in best performing fund or best these days. So people don't even put performing; they just put best large cap funds, and they just go by portals that provide this kind of information, which is based purely on return. But mutual fund ranking is a much more complicated and technical process, and CRISIL's reports come out every quarter. If you are interested in downloading it, I believe it's free for the public.
It's available on CRISIL website.
So crisil.com, or you can just put into Google or any search engine, CRISIL Mutual Fund Ranking Report. The PDF is there. It's freely downloadable. I think you can even get onto a mailing list and get it every quarter. And when you download that PDF, you will see the extent of number crunching that has gone behind the rankings. It gives you rankings in each and every asset class, which is equity and debt. It gives rankings within each and every. How many categories are there? That's what I'm interested in.
Yeah, so there are 25 categories we are covering.
25.
Yes.
That includes equity, debt, and hybrid.
Yes. Yeah. So, and again, mutual fund is a product. Now you have a situation whereby virtually most of the asset classes and investment segments are available through mutual funds. So you start with overnight liquid funds to high risk categories like equity, large cap, mid cap, and small cap.
Yeah.
Now, given that these categories are there, all the major categories at this stage we are covering as part of the ranking.
Yeah, very interesting. So if you're going on the internet to do stuff like best mobile phone and comparing two mobile phones, or even comparing two cars or two motorcycles, surely you can check out this PDF report. It's much more extensive and detailed. So my next question was going to be, what all do you cover? You've kind of answered that, but just an overview. You said 25 categories, 517 schemes,
Yes.
right? And you just run us through the main categories from a retail investor's perspective. Like within equity, what do you cover? Within debt, what do you cover?
Yeah. So as I said, parameters I spoke about, these are the parameters we look at. What we also do is, once each of the parameters are evaluated, there is a composite score which is computed, and that is then eventually used to rank the funds.
Okay.
As part of the final output, we put out cluster ranks. So if I'm ranking, say, 100 funds, top 10 funds become part of the rank 1 universe.
Okay.
And next 20 becomes rank 2, middle 40 is rank 3, and then you have 20 and 10. So it's like a bell curve with respect to the distribution. From investor perspective, they can look at top ranked funds, either rank 1 or 2, to kind of shortlist the funds.
Okay.
Rank 1 is the best performing fund in the ranking, and rank 5 being the weakest or in the universe. So that's how we carry out. And again, as part of the overall exercise, we do keep reviewing our criteria. We've seen there's quite a bit of changes that have happened. One, in terms of size of the industry. Second, in terms of the regulations. So there is a continuous process to evaluate or review the methodology or the process we are following, and that keeps getting incorporated in the ranking process.
Okay. How can retail investors benefit from this?
So I think it becomes a good filter criteria, quant filter for investors to kind of shortlist the funds. Someone who's looking at investing into maybe a large cap category or a mid cap category, they can go to the website, they can select the category, and there's a drop down from where you can look at the top ranked funds, middle ranked funds, and bottom ranked funds. So at least an initial quant filter is something that can be carried out by looking at these rankings. We are looking at consistency of performance, the funds who have done consistently well over a period of time, along with the portfolio quality that they are maintaining, the risk factor that I spoke about. Any fund which has lower risk in the underlying portfolio, along with the consistent performance, will tend to come on top in the ranking. And that is where the investors can shortlist these funds.
Very interesting. So now that we've gone into the background detail, methodology, process, and extent of coverage, let's get to the meat, the main core of the report. The latest results, I think it would be for the quarter ended June 2024. What are the latest results, and top, under, or over top rankings, bottom rankings, anything of the major fund types?
Yeah, so as we discussed, there are 500 funds which are ranked. Even if I look at top ranked funds, top 10 percentile, it would be about 51 funds which are ranked one across categories. Now, if you were to look at major categories in equity and debt, in equity you have FlexiCap, which is the largest category in terms of AUM. Fund like HDFC FlexiCap has remained in top rank for over a period of time.
Okay.
And they have kind of managed to generate superior returns, primarily from investing into, say, public sector undertakings, which have done well in the last 3 and 4 years. On top of it, it has also now started investing into banking sector because I think valuations are attractive. So they are actively managing their portfolio and able to generate consistent performance over a period of time.
HDFC FlexiCap.
Yes.
Okay.
Having said that, there are other funds also which are top ranked. I'm talking about the major ones have some consistency in terms of ranking also.
Sure.
Second fund in the large cap space, we have Nippon Large Cap, which again has remained in the top ranked over a period of time. This is a fund which maintains a lower quantum of churn in the portfolio. They buy and hold that stock for a long period of time. Some of the key contributors for the fund has been the PSUs and the stocks in the infra space.
Sure.
In the mid cap category, Motilal Oswal is another one. This is a fund which manages the portfolio slightly differently. It tends to have about 20 to 25 stocks
That's it.
in the portfolio. So slightly concentrated portfolio, which means that they have to get their calls right in those limited stocks. They have been able to do that, and hence they have remained in the top rank for a period of time.
Okay.
In case of small cap category, Franklin small cap fund is the one which has come up in the ranking, especially in the last 1.5 years. It used to be a top ranked fund some time back. There was a slippage in the ranking in the interim period, but now it has been maintaining top ranked over a period of time.
Very interesting.
On the debt side, I'll talk about some of the actively managed duration categories like gilt, then corporate bond fund category and dynamic bond fund category. Now here we find ICICI Pru topping the ranking, especially in the gilt and corporate bond fund category. Then we have Bandhan, which is top ranked fund in the dynamic bond fund category.
And just to note there, Bandhan is the old IDFC.
Yes. It's the old IDFC mutual fund. Now, if you look at Bandhan specifically, they have a philosophy of managing debt funds primarily from the perspective of interest rate or duration management. So unlike other funds which tend to focus more both on credit and duration, this is a fund house which tends to focus largely on duration management. And they have done it well over a period of time, and hence their fund is top ranked fund.
Sure.
Even from iPru perspective, the two funds which are ranked in top category, they have been able to manage interest rate volatility over a period of time and generate superior return through the period.
Very interesting. That's a comprehensive list of categories in equities. We spoke about flexi cap, large cap, mid cap, small cap, and within debt we spoke about interest rate and duration. So folks, all of this is available in the report. Do have a look. So Piyush, what are the takeaways for investors from this report? Like, how can they use the report to make better decisions?
I think one of the key objectives to also have this product in the market is to help investors make an informed decision. Now, I think while this particular report helps in fund selection, there's one more activity that investors have to do at their end is to shortlist the categories also. Now, that is largely driven by their own financial status or their overall investment objectives. Once the investor has identified the categories where they want to participate, then they can look at the rankings which is available on the website and shortlist the funds.
Sure.
They can also look at these rankings over a period of time. They will realize some of the funds tend to remain in top rank category, and that can become preferred fund for the purpose of investment.
Yeah. Very interesting. Piyush, for the past few years, passive has emerged as a large area for retail investors. I believe that the largest mutual fund scheme in India today is a passive scheme.
Yes.
What's your view on this active versus passive debate? Because in passive, so there's no concept of rankings. I mean, I'm sure that there'll be some that are slightly aage piche, and there'll be some ranking for passives also. But your view on this active versus passive, and honestly, is there actually a dispersion or a diversion between the rankings within passive?
Yes. So in fact, we do have a ranking on index funds and ETFs, which are primarily riding on Sensex and Nifty. And that is again, we have been putting out on as a separate category. The way we put out the rankings is we tend to focus on tracking error as a parameter. Objective of a passive fund is to mimic the returns of the underlying index.
Benchmark.
So the tracking error essentially measures that. How divergent is the fund performance vis-a-vis the underlying index. So it's a single parameter ranking. That is what we put out on a quarterly basis. Coming back to active versus passive, I think it's a hotly debated topic, especially in the US market, where the share of passive is as high as, I believe, 48%. In India, we still have alpha in the actively managed funds. So to that extent, the share of passive is still 17%, not as high as some of these developed market. Having said that, this is a segment which has grown quite rapidly, especially in the last 5 to 7 years. One of the key factors has been the investments that are being done by provident funds. Provident funds like EPFO and some of the exempted PFs, as part of their investment pattern or guidelines, they can invest up to 15% of their total investment into equities. And most of these provident funds have chosen passive funds like ETF through maybe Sensex or Nifty to participate in the equity as an asset class.
Correct, yeah.
So in a way, while we talk about SIP coming through retail investor, there is a kind of SIP coming into these passive funds through the provident fund.
Correct,
Every month there is a accumulation that happens in the form of contribution coming from the subscriber, which get deployed into these passively managed funds. Now, we generally tend to relate to passive funds primarily from the equity perspective. Debt also has seen a significant growth in the Indian mutual fund industry. In fact, the assets under management for debt passive funds is about 1.8 lakh crores. And that's it's a fairly large category. Yeah. In fact, larger than some of the passively managed or actively managed debt mutual funds.
Wow.
Of course, the growth has got hampered because of some of the tax-related when that has happened. Yeah. But it's another category that investors can look at. I think what from an investor perspective, what they can look at is if there is a first-time investor.
Correct.
And he hasn't invested in mutual funds, then I think first step is to take exposure to the asset class. Yeah. And these passive funds provide that medium to take exposure to that asset class. And once you get sort of used to it, get some experience, then one can move towards actively managed funds.
Yeah, that is going to be my next question. Is you've given me a good lead into that. So for a first-time investor, probably someone who's young, starting his career, wants to really go down the long path of mutual funds, equity and debt both. What would be your advice to him? What should this young retail investor look out for when selecting a mutual fund scheme?
To start off with, one key point is if he's starting in his career, so he has a very long-term horizon. Unless until there are individual specific requirement that he might be having, generally he would have a very long-term horizon. So to that extent, ability to participate in risky categories or high-risk categories like equity is far higher compared to maybe someone who is having a short-term investment horizon. So when we look at the performance of equity as a asset class, what we've seen is if you look at a horizon of 5 to 7 years, And that too, if you look at this performance history for a period of 20 years,
Sure.
You'll find that 80% of the times the return for an investment horizon of 5 to 7 years would be in excess of 10% and above.
Not bad.
So which is a decent returns. And when you look at sort of riskiness, standard deviation or volatility is a standard measure.
Yeah.
When you look at a 1 year return volatility, it will be in the double digits.
Yeah.
But once you start looking at 10-year horizon, the
It comes down.
volatility comes down significantly. In fact, it comes down to 2%, which is comparable to a debt
fund. Yeah.
debt fund. So from the investor perspective, I think first point is to define the investment objective and look at the categories which are suitable for them. And then they can, of course, look at various inputs, including the ranking that we put out for fund selection.
Yeah, it's very interesting, folks. So, if you're someone who's sitting down for the very first time and analyzing mutual funds or what Piyush is saying, of course, a great place to start would be for you to first define your objectives. If you're doing something for a 20-year or a 15-year or a 10-year time frame, it just allows you that much more range and scope to choose your mutual fund. Like Piyush said, volatility, especially in equity funds, because that's what we spoke about, tends to come down over time. And volatility is honestly how do you define volatility? The ups and downs that happen with your returns, I guess.
Yes.
Yeah. So, as you would be seeing these days, that equity returns have been very good, but they might not remain good forever, because that's what history tells you, by the way. So, define your objective, have a look at the schemes that suit these objectives, and then a longer term outlook, a longer term horizon is always better for you to choose your schemes and look at volatility, look at what Sharpe ratios or what other ratios are relevant out here.
Yeah, I think from the perspective of disclosure that mutual funds put out, they are fairly extensive. One can look at the fact sheets, look at the portfolio composition. One can look at some of these measures that mutual funds anyway put out, and also, of course, look at the rankings and make that decision.
Yeah. So, folks, somewhere the debate, if you're with your friends and you're hanging around, the debate within mutual funds is always performance. If it's not performance, then it is expenses. I feel that 80-90% of the debate on mutual funds goes on performance and expenses. By do your research. You've got a great product out there, totally free of cost to choose, with stuff like volatility, Sharpe ratios, and much more. So there are tools out there to help you make a better choice, or at least a more informed choice beyond just performance and expenses. Okay, Piyush, how do you see the mutual fund industry's growth in India? I don't know, it took like the longest time to go from 1 lakh crore to 25 lakh crores. We celebrated 50 lakh crore some time back, and now I think it's already gone to 60 plus.
Yes.
So 50 to 60 jump kind of happened quite quickly.
Yeah, matter of 6 months. I think.
Yeah, I mean that's at least I haven't seen that in a long while. Your view on the fund industry as such going forward, big picture, talk about growth, talk about product choices, anything.
So I think growth has been quite impressive. So when we compare Indian mutual fund industry with some of the global industries like US or Brazil, some of these geographies, our growth has been in excess of 20%, and none of the other geographies have grown at that pace. So it's at 60 lakh crores as we speak today. But one of the commonly used metric to assess whether the industry size is large or small is assets as a percentage of GDP. So that's a very commonly used metric that generally is used. Now there, when we look at India, it is at 17%, compared to a global average of 74%. Of course, that global average gets impacted by someone like US, which has a larger share, and they have assets as a percentage of GDP, which is 150%. So it's a fairly large number. Now, when you look at this metric, we still have a long way to go. This is in terms of assets. The second component is penetration. So while the industry has large sum of AUM coming from primarily Mumbai and Delhi, there is a significant amount of growth we are seeing in the B30 cities. So T30s, B30s are commonly used metric to kind of assess what is the sort of penetration which is there.
T30 being top
30,
B30 being beyond 30. Okay, please, go on.
And there we have seen that the number of folios in case of B30 have surpassed T30. So
in numbers.
Number of folios.
Wow. Okay.
So which means that more and more people are taking up mutual fund as an investment avenue. Of course, the ticket size could be different compared to metros.
But that's okay. The penetration is wider.
Yes, yes. But this is there's still a long way to go. At least what we believe is over the next 4 years or so, this growth of 19-20% will continue. And to that extent, I think it will cross 100 lakh crores in a matter of 3 to 4 years. SIP has been the primary factor. I think latest number showed 21,000 crore, which means that on an annual basis, anyway, 2.5 lakh crores to 3 lakh crores of money is getting added only through SIP. And this is a retail money which tends to be for longer term. So there is a stickiness that is associated with this money, and the growth is going to be there for a period of time.
Okay, Piyush, a lot of discussions for retail investors happen around equity markets, large cap, mid cap. That discussion is fine in its place because I guess equities in a certain way is more accessible, more understandable to a larger audience. But debt is a much bigger piece of the pie. Even globally, debt mutual funds, the debt markets are bigger than equity markets. And there have been some developments. I mean, India traditionally has been a slightly closed market to foreign investors as far as debt is concerned. Your views on this inclusion of India's debt in bond market indices globally?
Yeah, so I think 2020 is when RBI opened a fully accessible FAR, is what they call it, and which sort of paved a way for investments by foreign investors into the Indian government bonds. Last year in September 2023 is when JP Morgan announced that they would have weight assigned to Indian government bonds as part of their index. Now they are maintaining that index. So we spoke about passive funds. There are a lot of passive funds who would be using this index as part of their fund management. Now I think there is an expectation of about $25 billion coming into Indian government bonds just because of the inclusion of Indian bonds in the JP Morgan index.
Sure.
Now, besides JP Morgan, I think there's also been an announcement by Bloomberg where they also intend to include Indian government bonds as part of their index. What it means is there's a good amount of money that will come from foreign investors into Indian government bonds at this stage. Now, what it does for the government is, of course, it diversifies their investor base from where they can raise the money. It also kind of have on a standalone basis impact on interest rate, which is going to be on the easing side. Government will be able to kind of reduce cost of borrowing. Of course, there are multiple other factors that can have an impact on interest rate, but at least this will have a positive impact from the interest rate decline. In a way, it's a good development from the bond market perspective.
Sure.
It also paves the way for investments by foreign investors in the corporate bond segment. Currently, we have domestic institutional investors investing into corporate bond. Once you have foreign investors also coming in, there will be a positive impact from the interest rate perspective.
Piyush, we are done with our show. The main questions that we have, but in the end of every episode, we have a standard question for all our guests who come in because we love that people are still interested in books. So any book recommendations, anything that you're reading, anything that you'd like to share with our listeners?
So I think one book, Same as Ever by Morgan Housel. That's an interesting book, and he talks about the challenges with respect to predicting future, and a lot of time people try to predict risk, but if you can predict risk, then it no longer remains a risk, right? Then you kind of can take care of it. And that's where he talks about control the controllables, where you look at some of the aspects which have remained consistent over a period of time.
Sure.
And there he talks about human behavior. It was in a way in the past, it will continue to remain the same in future. So I think a key point here is to focus on some of these areas. If you were to link it to our today's point of discussion on mutual funds, fund selection, one of the key figure in the entire ecosystem is the fund manager, right? And how he manages the portfolio. While there are external factors in the form of market, regulations, the individual trait of the fund manager is also critical. So it's important to understand how a fund manager is managing a particular fund. Technically, we call it investment style, and it gets determined by his own individual preference and the way he wants to manage a portfolio. So even from a fund selection perspective, look at how the fund manager is behaving, and that can also become a useful insight for the investor when they are making an investment decision.
Fantastic. I like how you wrapped the whole book recommendation into an actual actionable advice for our audience. So folks, remember that the book is same as ever by Morgan Housel. The key takeaway for you from that is fund manager behavior. Of course, you can have a look at that and much more to discover more on the CRISIL Mutual Fund Ranking Report. That is it. That is a wrap on this episode of Paisa Vaisa. My guest, Piyush Gupta, Director of Fund Research, CRISIL Market Intelligence and Analytics. Piyush, thank you so much for doing this for our audience.
Thank you so much.
Thank you.